People should care about deep tech because most of the innovation will come from deep tech startup. And you can take any domain like food or energy or mobility, you will find deep tech startup that will revolutionize the world. Of course, vaccine is a well-known domain with Moderna, but you can find also deep tech in mobility like Lilium Aviation. You can find them in the food industry like Memphis Meat, and you can find them of course in energy with Commonwealth Fusion System. So deep tech investments could be greatly improved because today there are some roadblocks. If you look on the government front, there is an issue in investment from the grants to the labs to the startup. If you look at the companies, they need to invest of course in deep tech startup because they need to reinvent themselves, but they don't know which deep tech to choose and how to work with them. If you look at VCs, they have an issue with the type of profitability and the length of the return, and also they don't have the capabilities to assess the deep tech and de-risk it. And then if you look at LPs, the limited partners, they have also an issue in investing in long term. Today's funding for deep tech is already impressive. We are speaking of $60 billion. And it should go up to $140 billion by 2025. But if we are able to remove all the friction in the ecosystem, we could go up to $200 billion.
Deep tech investment is growing, but there are 4 paradoxes that show that actually the deep tech investment model is broken and there is a lot of room for improvement. The first paradox is that investors drifted away from their original mindset and purpose, which was to take risk, to go more towards distributed returns. This is well illustrated by the famous quote from Peter Thiel. We wanted flying cars, but we got 140 characters. And deep tech startups are literally building flying cars. So it's a whole new playground for VCs to really go back to their original roots, which is to take risk, to invest in what they think is the next big thing. This question of risk is actually very important, and this is the second paradox. Investors are afraid about deep tech on one side, but on the other side, it's even riskier not to be exposed to deep tech at all, because they might miss the next big thing, but also, by not understanding future disruptions, they might invest in the wrong startups and their whole portfolio might be exposed to deep tech. The third paradox is about the barriers to entry. On one hand, it's never been easier to perform cutting-edge R&D. You have nuclear fusion, which is covered by startups, for example. But on the other hand, it's still very difficult for deep tech funds to raise money because a lot of the money from LPs go towards more traditional and bigger funds. The last paradox, and it's a consequence of the others, is that there have never been so much dry powder, almost $2 trillion. But on the other side, deep tech ventures, which represent the next wave of high return investment, they lack funding.
Shifted the focus from a reward focus to a problem focus. This brings with it a shift from risk minimization to risk mitigation. What does it mean, risk mitigation? It means that you start with a problem and you work with your venture as a venture capitalist to really address the problem, bring all the pieces together to achieve it. And what is really important is you have this approach, you get access to a much higher reward, because if you solve the problem comes usually with incredible value creation. So risk mitigation leads to higher return. This is the way to solve the mindset paradox. Deep tech is characterized by high requirements in terms of understanding science and having the knowledge required to really be able to address the problems. This is a prerequisite to address risk. But it's not only about building the knowledge inside your venture team, because nobody, no investor will be able to amass all the knowledge required to deal with deep tech. It's really important that you build and leverage and tap into a very strong ecosystem that is going to support you and contribute massively to the risk mitigation. Out of our research, we have identified 4 archetypes that are best suited to support investing in deep tech. Starting from the core of it, we see that there is a need for a specific deep tech venture capital fund capable of creating the ecosystem, build the capabilities and the knowledge around deep tech, and works to actively nurture and help its own ventures to de-risk the process and create a very strong portfolio. But feeding into that, we see the possibility and the importance of creating venture building capital assets, a kind of venture studios, if you want, translating good scientific principles or transforming good scientists into entrepreneurs. It's not an easy task, and it's important to have it at times to be able to nurture the deal flow or transform incredible opportunities into new ventures. Then there is another fund type, the adaptive capital, and it's really important to have capital that is capable of adapting to the different needs of the different ventures. Supporting a nuclear fusion startup is very different to support a synthetic biology startup, and you need different capital stack to be able to do so. And last but not least, we're seeing the importance of a kind of PE deep tech that invests a bit earlier in the process of what would be normally the growth phase, but has the understanding of the technology to be able to make the right calls and invest into the right companies.
To unlock deep tech investment globally, we need a new narrative that spreads across the whole value chain: startups, VC, private equity, and LPs. And three elements should not be missed. Concerning the risk, yes, there are some risks, but they can be systematically mitigated. Second, the capital requirement is a little bit higher at the beginning of a deep tech venture's life, but later on, usually they require less capital than, for example, digital startups. And the last element we should not miss is that there are lots of success stories, but they are not enough told today. One good example is Lilium Aviation. They are the winner of one of the winners of the Hello Tomorrow Challenge, and in only a few years they exited through a SPAC at more than $3 billion. There are many deep tech investors already achieving great returns on investment. And we see also institutional investors and sovereign funds investing in deep tech.
So deep tech is a superb opportunity for both investors and our clients. The first reason is that investors have the opportunity to solve the big issues of our times, like climate change and sustainability. We need technology. Breaking compromise in this domain requires deep tech. There is also an issue in being the first one to be able to address huge topics. If you invest in deep tech right now in energy, or if you invest in deep tech right now in mobility, you'll be able to get most of the prize. The third reason why investors should act now is that if you have the right capabilities, you are able to de-risk the deep tech investment. So you can actually go faster with less risk and have extremely profitable investments. Actually, the time is now, and for me, 2021 looks like 1995 for digital.